Well, hello and welcome back to the 5 Pillars of Business Success for Startups. I'm your instructor, Brett Hirsch. You're watching the Boot Camp Alpha Test. If you're watching this, we really appreciate your feedback. Thank you so much. Help us make this a class or a series of lessons, a course series that will really help your business, your client's business, and your students' business. So thank you again. We really appreciate your feedback. Pillar 3, make a profit. I believe this is lesson 4 on Pillar 3, make a profit. We're now on the variable costs. As you can see here, we're discussing Jimmy's Lawn Care. As you see, we've started off with his entrepreneurial profit, which remember, what your business needs to generate more cash than it spends after paying all of its bills and your personal bills. So we're working our way up the ladder here for Jimmy. We discussed his personal bills are $4,308. His debt and other payments are $520 a month. His fixed expenses are $785 a month, which we determined in the last lesson. Now in this lesson, we are discussing variable cost. We introduced this in the last lesson. We're going to go into a lot more detail in this lesson. So it can be a little confusing for a lot of folks, can be a little bit difficult for a lot of folks to grasp and to calculate. So we're going to use Jimmy as an example, of course, and with the ultimate goal of you determining your own variable cost. So variable cost, as the name entitles, is their costs that vary directly with the work that you're doing. So they're going to vary directly with the items that you sell or the work that you have completed or the number of units that you might manufacture. These costs vary directly with those costs. They're usually measured by a job or a customer. They're not measured per unit of time generally like fixed costs are. They're measured by customer or unit produced. It's also called loosely, you'll hear the phrase cost of goods sold. I use that phrase in other areas in this lesson. We're really discussing variable costs here, even though it's very closely related to cost of goods sold. Cost of goods sold is more of a, well, they're both accounting terms, but cost of goods sold is really a calculation that involves inventory and other items, and we're really not using that per se in this lesson. But you're going to hear it called that. I know there's other places in here that I call it cost of goods sold for space purposes, but anyways, you hear that phrase, it's very similar to variable cost. Way to tell if you have a variable cost is if you're not producing your product or service, you're not servicing any customers, you're not going to have those costs because they're based on the customer. They're not based on unit at a time like most fixed costs are. Many service businesses have very little variable costs, which surprised some of them do have some, but most of them, if you're a strictly service business, you know, like accounting, beautician, those sorts of things, you're going to have some costs. Like say, for example, beautician is going to have shampoo and other items like for maybe doing a perm that are going to vary. However, their fixed costs will be much higher relative to their variable costs. So just keep that in mind. Also for service businesses, if you have few costs, but their labor productivity becomes that much more important, which we discuss a lot in managed systems and lead people. Now, if you're a business charging for parts plus labor, you're really not going to have a whole lot of variable costs per se, because right in the invoice you give, say you're a plumber, and on your invoice you give to your customers, your variable costs really are included in that invoice. You're going to have some costs like travel, that may be a variable cost per customer. But for the most part, you're not going to have costs directly associated with providing that service other than maybe driving or other items. So just keep that in mind. Parts are not variable if billed separately. Now your labor, if you have employees, your labor is going to be more of a fixed cost for most of these types of businesses because most of these guys you're going to have on salary roughly 40 hours a week or whatever you have them work. If you have them only working by the job like you might a contractor, they're really going to be more of a fixed cost rather than a variable cost. A lot of businesses make that mistake, which I'd rather have them a variable cost, but most of them are overhead. All right, variable costs are really important to manufacturers, retailers, restaurants, builders, even florists. Any businesses that manufacture or build, like if you're building a birdhouse, your variable costs, you have costs to go into that birdhouse, so you're going to have variable costs. So let's discuss how to calculate variable costs. We'll go through a couple steps here how to calculate variable costs. First thing we need to do is we need to determine a unit of measurement. We need to determine how we're going to measure our variable costs. So for construction, for example, you might, if you're building a lot of houses that are similar design, say as in a development and they're very similar homes, you might do costs per home. However, if you're a custom builder or something like that, or if you have several different styles, you might do average cost per square foot. You know, that really depends, but we need to determine a unit of measurement. If you're manufacturing, you're going to do cost per unit, as I said earlier, like if you're building a birdhouse, what's the average cost for a birdhouse? Your average birdhouse, how much does it cost you to build? If you're in food service, you're going to have an average cost per menu item. Preferably, I would really rather use an average meal because you're going to need to use the menu item to figure out what you charge roughly for those different items on the menu. However, for our purposes, we want to determine how many meals you need to serve a day, not how many pork chops you got to sell per day in order to break even and meet your business imperative. So we really would focus on your average meal. How many times do you got to turn those tables over? That sort of thing if you're in a food service. If you're in retail, most retailers are going to have, a cost per item sold, which really a lot of retailers will mark up. Say if they pay $10 for something, they may mark that up by 50%, meaning they're going to charge $15 for that item. Their variable costs are going to be a little different. And not in our alpha test, but in our ultimate class, we're going to have a special class, a special example for those that are in the retail business because it's a little different calculation. But it's still very, very important. Their variable costs can be just a little bit more tricky than other businesses. So next step we want to do is we want to calculate variable costs. And the next step is going to be we need to tie variable costs to that unit of production, that unit of measure we just discussed. So let's go to construction homes. This is an example where somebody's building basically the same home, like a tract builder, let's say, very similar home. Townhouses might be a good example. Cost going into that, you're going to have your land. You got to break that down, average land cost per unit. You're going to have your permits that are vary directly with the cost of the home. You're going to have materials and shipping. Now you notice I include shipping in that, also freight in, because you think about it, if you're not building any houses, you're not going to have the materials and you're also not going to have the shipping. So you want to include shipping in that. Subcontractors, let's say you have your plumbers, your tradespeople, your masons, your drywallers, what you pay them on the home, that's going to go directly into that home. You're going to have direct payroll. As I said earlier, I usually view payroll as being more of a fixed cost. However, if you really are able to have those employees show up and work, and then if you don't have any work for them, you just lay them off, that direct labor would be a cost that would go into constructing that home. It depends on how much control you have over that cost, really, and how much you can tie it to the unit of production. Sales commissions would also be a cost that would vary with the home sold. So we have that. Now the next step, once you've done that, you want to determine your average cost per unit. So now that we know the costs that go into the manufacturing of homes, we want to kind of determine what is the average cost per home constructed. Now remember, like I said earlier, some folks might use square footage if they have an average home. They have a lot of different designs, average cost per square foot, say if you're in the manufacturing. However, we need to determine an average cost per unit. That could be a home constructed, particularly if you're a tract builder or if you're building your townhouses, for example. Items that are very similar in what you're selling. Or job completed, what's your average cost per job completed, average cost per widget manufactured, average cost per birdhouse manufactured, average cost per meal served. Remember I said meals, not necessarily every menu item, because your customers don't just buy a menu item, they buy a meal, they buy stuff bundled together. So what's your average cost in determining that? Average cost per pizza made. Let's say if you're a pizzeria, you do a lot of delivery, what's your average cost per pizza? We need to determine that per unit on an average basis. Now for Jimmy, his is going to be acre mode. So he's in the landscaping business, and really he's in lawn care. He's not really landscaping. He focuses on mowing lawns. That's what Jimmy does, and that's what he's going to be using. He needs to determine his average cost per acre mowed, and some lawns might be a lot easier to cut than others, so he needs to be, his cost could vary from lawn style to lawn style, from geographical, how the lawn's shaped. So he needs to come up with an average cost per acre mowed. So what he came up with is Jimmy's variable cost up there. His variable costs are, he has $2.85 in fuel. He's got a gas guzzling big old lawnmower he purchased, and it doesn't get good mileage, quote unquote, per acre. He has $2.85 in fuel per acre, and he also knows that so many hours or so many acres that he was able to know how length of time on average, how many hours it took him to do an acre, and say every 40, 50 hours of running that mower, he needs to have it serviced. So he was able to figure out that cost him 35 cents per acre in equipment maintenance to mow an average acre of ground. So his total variable costs are $3.20 per acre. So that's how we arrive at that. Those are the steps you need to go through in order to arrive at what your variable costs are per unit, average variable cost per unit of production. His is acres mowed. So now we have Jimmy's Lawn Care. Entrepreneurial profit is what we're after. We know that his personal bills are $4,392. We know that his debt and other payments are $520. We now know that his fixed expenses are $785, and all these are on a monthly basis. Now, cost of goods sold or variable costs, that's where I slipped that cost of goods sold in there I told you about earlier. That's $3.20 per acre. All these other measurements are per month. You'll notice this is different because this is per unit of production. So it's different. One of these is not like the others. Variable cost is not like these, and that is a per unit, not a per month. So it's very important. Now, next what we want to determine is, now we need to know sales revenue. That's the last part of this puzzle to determine what his entrepreneurial profit is going to be, and we don't know that yet. So we'll discuss that in the next couple lessons. In order to arrive at what is the goal here, to get your business imperative. So you determine, to be profitable, how many units your business must sell of however you decide to measure those units, how many meals, how many homes, how many haircuts, whatever that may be, how many acres mowed, and at what price that you must charge for those units. So we're going to discuss that in the next few lessons. But until then, what we want you to do is we want you to determine your variable costs. So go about doing that, and as I said earlier, don't dig into minutiae. You can get into so much detail that the numbers become irrelevant. We want you to determine just a good average cost of whatever your costs are now, variable costs directly related to those units of production. Or if you don't have a business yet and you really are considering a startup, dig in there, do some research to see, how am I going to measure these units, what unit I'm going to use to measure, for the end user. What's a good measurement for me to do production, and also determine how many costs are going to be directly related to that unit of production, no matter what it ends up being, a meal, your hour worked, whatever that might be. Okay? Thank you so much, and we'll see you in the next lesson.